If any of the zooms, if you guys can't see any of the numbers or anything like that, just let me know, and I'll go and fix that. So to get into it right now, what we've got is I'm going to go through all the different parts of the model that we've already built out, right? We've built out the revenue build, and these are all come from financial statements that Roblox does. Typically, I grab all the revenue build and the DAU build stuff from their supplemental materials that we release on their quarterlies. So bookings, revenue, all stuff like that. I'm most likely not going to model out by quarterly. I think it's much easier and much better approach to go and model out things yearly. I spent some time on the sell side, and they do things by quarters, and I think that is absolutely hilarious. But yeah, all of these numbers are found in the supplemental materials that Roblox goes and gives out. We have a thing for our DAU page. I won't be modeling out a lot of this because some of it doesn't matter too much. I mean, I may go and do DAUs by age. We're going to be doing DAUs by region. Hours engaged, I want to monitor it. I don't know if I want to actually model it out. Same by age. Unique monthly players and average paying players, I think we will go model those out. But overall, I think some of these are irrelevant to how you want to go and think about the story of Roblox. And for those that don't know about Roblox, video games company allows users to go and make and build their own video games and monetize them. Becoming very popular with the Metaverse. Turn off grid lines. Income statement, balance sheet, and cash flow statement, all here. Again, all the run-of-the-mill stuff. I won't be touching the quarterlies for modeling out purposes. I never model out quarterlies, really. I kind of just track them, and that's about it. Price target and free cash flow. This is an old version of free cash flow multiple that I used to do. It's still my template. Probably won't be doing that. Typical IRR DCF, so this is different than your WACC-based DCF. The difference here is that you're doing what's known as a base rate. So my IRR is 10%, so I want the investment to yield at least 10%. So using that as my discount rate, how do I get there? And I can go and increase and decrease it by going and saying, okay, I think they have a credit problem, so you add that to 2, then it goes up by 2 typically. I'll go and add one in if it's a foreign-based company, by at least 4 if it's Chinese, just because of some of the risk. And you're starting to see that right now. Year-end should be 2021. Competitive risk, growth stability, all that stuff like that I can add or decrease based on to go and lower the discount rate. WACC, DCF, super simple here. And then WACC calc. And we'll be doing a different version of our WACC calc than what you would have learned in finance school, because since I have access to Bloomberg, I can go and I like to go and do this approach anyways, using weighted average fixed coupon, which for Roblox is 3.8%. What's really important about doing this method, and I'll get to it a little bit more when we do it, but if you were to go and put in something like a Comcast, doing your basic WACC method of using a treasury plus some type of risk premium for whatever their corporate spread is it'll be vastly different because you're doing the weighted average fixed. This can yield a lot more, a lot less than this, and they have multiple durations, even a perpetual and preferreds. So knowing also the weighted average maturity is big too, because it does affect the corporate long term when you think about WACC, because WACC does change over time. It's not fixed for all companies. It changes dramatically over years. So that's how I like to go and do my WACC, is using weighted average fixed coupon versus just taking the 30-year, 10-year, plus the AAA or AA or whatever the credit standard is that for the company you're working on, and adding that onto it. I think this is a much more holistic way of looking at WACC, because it incorporates their entire credit structure, versus if you were just, like I said, go and blatantly just go and put on something and assume that it's the same. I like to also go and do discount multiples, and we'll be going and taking a blended average from Bloomberg of different stuff. If you read the title, it says modeling out Roblox and talking about the metaverse. It's the financial model of Roblox, my dude. Here, I'll just clear that out. Modeling out Roblox company. How about that? Or financials will be a better term. Sorry, my man. So I like to do discount multiples. I think it's a great way to... Sorry, dude. Sorry, I named the title incorrectly. It's my bad. So I like to use discount multiples, which are a great way to go into a gut check, and also for some companies like Roblox, provide a more accurate valuation approach because Roblox is completely and utterly unprofitable. So using discount multiples can get us a better understanding of where they actually trade, prices that we can go and expect versus just doing our traditional DCF. And then we just have a charts page. Already got some data in here. Take off these grid lines, and we can do some charts later on. That'll be in the valuation standpoint, but that's kind of the overview right there. So we'll go and get into how we're going to go and model out their revenue. And to first go and think about how we're going to model out revenue, kind of go and take a look at active users and DAUs, because we're pretty much going to go and backtrack. We could just straight line model out revenue on the growth rate, but you can actually back calc out revenue from bookings, and Roblox does go and give all these calculations in their quarterly statements and in their supplementals. So we can go in. I'm pretty much going to do bookings, and then use change the deferred revenue and other to go and get our what will essentially be our top line revenue. Also helps us go and estimate bookings a lot better. And how we're basically going to go and do it is take average bookings per DAU, estimate that going forward, and then use that to go and calculate our bookings to revenue, et cetera, et cetera, et cetera. So first we have to go and model out DAUs because, like I said, if we go in here, take our average DAUs for average bookings. Excel, don't glitch on me, please. That divided by we get the same once I just go and I think I gotta go and do it by like 1,000. Yeah, we get the exact same. So once we go and get that, like I said, you can go and get bookings. It's just gonna be going in essentially modeling out DAUs. And once we get DAUs, we can go and estimate what the average bookings per DAUs will be, the growth rate there, etc. And then backtrack back to revenue. So DAUs, how we're going to go and do this is, I did find this great report from Newzoo all about global games market and VR metaverse fit. I spent a lot of time trying to track some different estimations out there, and I thought that this was going to be a very good one to go and do. It's a great report. I've read it a couple times. I read it when I was working on the stock a couple months ago, back when I was at my previous job. It's a really good encompassing report. It's free, by the way. You can go in. You can go and find it on their website. Download it. Just got to enter in your email. And what I really liked about it was, if I remember the page number, they give global player forecast, so we can use that. And then they also go and give essentially what 2021 games by region, gamers per region will be. And we can go and do essentially, we can go and assume what Roblox can go and capture from that. And then pretty much just do a market share and then extrapolate that out. So that's exactly what we're going to go and do. I'll just ignore my Bloomberg Launchpad in the background. I know most of you also don't have access to Bloomberg, so keep that in mind too. You can do this a lot of different ways, but since I do have access to Bloomberg, I'm going to be using it. So, gonna go right here. And just put in new zoo global player estimates. Because they have them, that's for fourth quarter. Of a nice little year over year. And they're doing in billions, so we're just going to go and do it match to match. So we'll go back to 2018. Yes, I know it's in percent. We'll take care of that. I always mess that one up. So these are going to be global players. So not all of them will be attributed to Roblox. So what we're going to go and do is essentially create a couple tabs that will go and have us go and say, okay, what if they go and get 20%, 30%, 40%? I'll probably do 10, 25, 30 maybe as our bull bear analysis. And then do a nice little year over year. And then we can also extrapolate out by pretty much have it growing at whatever the average. We're gonna have it growing by what the average growth rate is, probably trailing off a little bit. So I'll do 3% hard code. I've really gotten into doing red as assumptions. That's kind of been one of my things I've picked up over time. So there we go. We have our approximate global players. And then we got to go and just say, okay, you know, and we're going to go in. I could go and do a whole bull bear on this, but I think it may be a little bit easier just to stick with an ending number and do like a Kager analysis on it. So we can see right here, you know, Roblox currently 0.2% of global share as of 2020, the end year. And all these are predictions. These should all be HFC blue. Sorry, new zoo. So could they, we'll just go and say this. They'll go and get 10%. And then I gotta go and do Kager. I always fucking forget how to do Kager. So it's going to be 10 periods. So it's going to be Jesus Christ. Okay, it's going to be our start divided by our end. Raised to 1 divided by number of periods, which will be 10 minus 1. Should not be negative. Oh wait, I know why it's negative. Oh, whoops, I swapped these two around. That's what I did. So it should be n divided by start. That's what it is. Minus 1, so 24% CAGR. And then it's just going to be times what our growth rate is, which is our CAGR. Always hate when that formats incorrectly. Let's actually lock that down. Oh, I didn't F4 it enough. There we go. start off there, see if it gets to, if it doesn't get intense enough. I think rest of world will probably end up being, probably gain 1% every single year. APAC, probably 0.05. Shut down. 0.05. Just because, whether you like it or not, video games are essentially a demographics business. So, and when it comes to population, those areas are growing much faster in terms of video game share. So, then we'll just go DAUs. Actually, then we'll go and get our own numbers. Boom, as easy as that. Can drag all these over. And there we have it. DAUs all done up. I'm not going to probably go and do underage, 13, all that stuff. I mean, my general, it'll be a ton of work. Paying users will probably go and do. Because my bet is, and I'm going to start off by simply doing whatever the newest quarter is. Let's go and see what the average. I mean, what we can probably go and do is put these. There's implied purchase rates. Do the same down here. Just put these as percent of DAUs. And then kind of judge it out from there. And this is sometimes when using quarters is easier because we get a better trend rate, right? We can see it's more in the 25-ish%. This is kind of in the 20s, so what we'll go and do is still do our percent of DAUs. Just kind of the same, it's off by 1. Then probably expand this out a little bit. Maybe it grows 0.2%, which for paying users is pretty decent for something so young. I mean, it'll probably grow faster. Now I think about it, probably bump up to 0.05. And maybe we'll just stick with that for these. And then you're essentially reverse engineering all off of our DAU calc. And you get to pretty steep numbers because we're dealing with large numbers here. I mean, it's essentially 30% of what our ending DAU calcs are for paying users, which is not terrible. What all goes to say. And now we're going to go and swap over to bookings and revenue and build out some of our cogs eventually. So average bookings per DAU. Right, this is our one where we said, okay, if we can go and do this, we can reverse engineer. So we'll go and give it our best estimate of it. You know, can they get to essentially what peak cable bundle was of around $80? Perhaps. So, but to go and give us some marginal room of error, we'll go and say $75, kind of peak cable bundle-esque metrics there. So a 2% pricing CAGR, which is somewhat similar to what cable has. Could it be more aggressive? Perhaps. But come on, well, remember how you go and do these calculations. So that's our growth rate. No, it is. Because it is just a growth rate after all. Block A, not 98, not 93. Rock cell. There we go. And it's pretty much going to be steady 2% rise. Now, monthly, we just do it divided by, 12 essentially. This will self-calc out because I know where that's pulling from. So bookings, we go up to our bookings, we do that times what our DAU number is. I think I gotta times that by 1,000. Just get everything to match. I did 100, not 1,000. There we go. And there we go. We got bookings. Bookings can be large numbers. I mean, they could be doing 29 bill. They're going to be doing 29 bill at the end. Kager says that's 20% Kager. But as we know, bookings don't necessarily go and correlate to revenue. There's a couple step functions that have to happen first. Such as, we'll be using most likely the quarterly statements for this, because our change in deferred revenue, we're going to try and roughly model it out. And the average has been about 36% over the quarters. So we'll go and use that as our baseline number to go and get our change in deferred rev. I mean, doing this is going to be like 6 half a dozen because I could have gone and estimated rev out, then do it based off of revenue, etc. But this way's kind of be pretty clean, pretty quick, easy, simple, which is eventually kind of what we want to and have happen. And then, because then our main driver essentially is essentially bookings, and whether we're correct or not on that is how we'll be judged. I could probably trail this off too. I could go and say at the end, change the deferred revenue. I could go and scale this back, start scaling it back, starting here, and start declining a little bit by a couple bips a year. Could do 1% a year. This one, Roblox kind of doesn't disclose too much, and if someone does know and wants to go and tell me in the chat or in the comments, go ahead. I couldn't find a whole lot, so that's just me. But again, probably gonna do this. Probably gonna keep the average though. It's really small. Same process here as when we did our deferred revenue. Some of you Excel people out there may go and say you're clicking a lot. Just depends on how I'm feeling, to be completely honest with you. And the whole goal of this is really not for me to be too accurate. It's more to go and give you guys a nice knowledge base, a nice kind of how-to guide. And we're just going to carry over this formula because that's essentially we're calculating our revenue. The green means that it comes from another sheet, which is their combined revenue. So you essentially have carry through. So I should probably go and put here a nice little row that says percent of book. That we can go and see what our exact kind of transfer rate is. It's mostly kind of come based on what deferred revenue is. And this will actually also help us kind of tweak if we so desire to. Right, we could go and see, comes up as change in deferred revenue as a percent of bookings comes down. They become more highly correlated. So if you are trying to go and build your model in a similar fashion, you can change that. It doesn't have to be the exact way that I'm doing it. Like I said, this is more of a guide to how I think about these things. And a process, you can do it a completely different way. When I had when I had app data at my disposal, I was using a lot of app data to go and decide what those DAUs were, to go and extrapolate what the current level is and then expand that out. I don't have that data anymore. So I'm doing this the best way that I think, which is, like I mentioned, taking someone else's estimates that they've done a lot of research on, and kind of expanding out what I think some of those year-to-year gains are going to be, using a CAGR approach for what their share will be ultimately. And even down here, right, when we were doing Newzoo, we essentially went and did, you know, a pretty high growth rate approach to go and say, okay, it's going to end up here. All of these estimates, I could have increased these, but, you know, it's all up to how you want to go and do them. This isn't necessarily for me to go and have a direct position on the stock. I don't have a position in stock. So for COGS, they've pretty much stayed at about 25% mark. So I'm fine using an average there, especially since there's not a ton of volatility that's been going on. So I'm fine with that. And this is another thing that some people get a little stingy about is, oh, are you doing your COGS negative or positive depending on how you calculate? It's 6 half a dozen. It's either you're doing it as a plus or a minus function when you're thinking about your REV. So I don't mind having them as negative. Some people do. And again, that's all up to you guys. You can do them however, which way you want. I sometimes actually do go back and forth. So. And of course, it goes way faster when you already have a lot of the stuff pre-done like I did. For those of you out there that, you know, starting from scratch, you have to go and spend all the time to go put in the financials. They actually have a lot of this in Excel format that you can go and grab. So that's really nice. These are probably going to stay the same. And then our revenue by country we can go and do as well. And that probably went to the real revenue instead of our calc revenue. I mean, we can do this. We can just have that be that. Might as well. There we go. And as a percent of REV, let's go and look at our DAUs. We can safely say this is going to shift a lot based on what we did over here on our DAUs by region, right? That's incredibly safe for us to go and say. And so we have, obviously at the end, we're going to be having DAUs in APAC are pretty much in line with North America, rest of the world growing dramatically. So I may go and use percent of DAUs as percent of REV. Same scaling. Kind of same growth rates. And see where that lands us. probably more aggressively on Asia. Probably double these up, actually, now that I'm thinking about it. Make that a +2. Bring that over. And that means probably America. North America is probably gonna need to fall a little bit heavier. To where Europe is actually negative, so probably draw this down, hair down. There we go. So then, again, real simple. Revenue times that. Revenue. Oh, geez. Revenue times their percentages. Then we can fill in growth rates and all that stuff. A lot of you will be going and saying, wow, it's a tremendous fade down. But again, we're growing users more than anything else. So So that's kind of it when it comes to us modeling out revenue and users. So that will go in, I mean, not bad when we think about it. I mean, revenue is probably growing. Yeah, like I said, I mean, yeah, it's a fade down, but at the end, growing at 28% at the end is still pretty dramatic. Giving us 33% revenue CAGR. So, I mean, whoops. So I think that will go and be the kind of end of part one here, which is going and doing our REV and DAU build, and then we're going to go and jump into income statement, most likely balance sheet and cash flow all in one. If not, that'll be a separate one, and then we'll do all evaluation methods.